We're on our best 2-year job creation streak in 20 years.
What are you, nuts? Who'd believe that? Let me tell you the truth. First of all, the 292,000 jobs we got in December 2015, and they told us the unemployment rate is 5%. Not true. You can't trust these people on Wall Street. You can't trust the press. What they don't count is, in December, for example, the 615,000 discouraged workers. A discouraged worker is a person unemployed, gave up looking for work, but this administration does not count them as unemployed when calculating a 5% unemployment rate. Instead, they classify the discouraged as marginally attached to the labor force, but they're not considered part of the labor force or part of the unemployment. That's why you can't trust what they tell you. If we back into 625,000, the real unemployment rate is 12%, not 5%. That's why you got to join my gang, where you get the truth and where we use charts. Join the gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
AMVA, and I've lost over 30K on it, but it had excellent earnings the last several quarters, and they make the cameras and drone equipment. I don't know why it's so weak these days.
It's so weak these days because you don't pay attention to what they make. You don't care about their earnings. The problem is the institutions are pulling their money out, and that's all you need to know, and that's what we identify in the chart, and that's why I become a Phil's Gang member.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, my name is Phil Grande at philsgang.com. The 401k big lie. They tell you invest $10,000 a year for 30 years, compounded at 6% annually. You will have a grand total of $245,000 to retire. That is not true. That is not the truth. What they don't tell you is the hidden fees. There's 27 hidden fees in your 401k. When you're all done, you lose half of what you put aside for your retirement. That's right, half. And another thing, you're not allowed to do individual stocks in a mutual fund. And you're not allowed to make money when stocks go down. That's ridiculous. Would you buy a car with just forward and no reverse? Why would you ever be in a fund that you can't make money when the stock market goes down? Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. There is only one talk show host, Phil Grande, who delivers both social and financial talk. Not even Hannity or Rush can deliver a 1-2 punch like that. That's Phil Grande, philsgang.com. Phil Grande is unique, the industry leader, the first talk show host ever to combine social issues and finance into winning stock market ideas. That's Phil Grande, philsgang.com. That's philsgang.com.
Hi, I'm Phil Grande, philsgang.com. Listen to what Fisher said, the former Fed governor.
We front-loaded at the Federal Reserve an enormous rally in order to accomplish the wealth effect.
That's right. Did you hear that? They took the stock market, front-loaded it, ran at 200%, so we ended up not only with a fake stock market, but fake GDP, fake money, fake jobs, fake prices, fake everything. But we took advantage of that, and we're going to take advantage again. That's why I told my gang in May to short the market. On 5/29, that's May 29th, I'm telling you to short the stock market. And we were right, and the market went down over 11%. That's why you got to join my gang and learn how to short stocks just as much as buying them. Learn how to short with me, Phil Grande at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. What is Phil's Gang? philsgang.com is a subscription website service that host Phil Grande has been teaching and providing daily stock investment recommendations for over 15 years, all in the name of making its customers educated investors and helping the kids at St. Jude's Children's Hospital. If you want to take charge of your financial future, then do not wait any longer. For only $49.95, become a Phil's Gang member today. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know, it's been 7 years now since Obama ordered his Fed chairman to lower the savings rate from 5% to less than 0.25%. With a false narrative, it would spur economic growth and jobs. Everyone would have an opportunity in this economy. That's what he said. But what it spurred was a front-loading of the biggest, fake, unsustainable stock market rally of 200%. That's what it spurred. Now, most people did not participate in that rally. because people got out of their 401k in 2009. And they said, just get me out. I want nothing but fixed income. And they got killed because with low interest rates, fixed incomes get murdered. You got to know what you're doing. If you're going to really retire, you got to be associated with the stock market. That's why you come to philsgang.com. That's philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Time is the one thing that we want more of. Without the donors, I wouldn't have my Audrey. They take care of our housing. They take care of our food. In addition to the best medical treatment that my daughter could ever have. So it allows me to focus on my daughter and getting her better.
St. Jude Children's Research Hospital. Finding cures, saving children. Learn more at stjude.org.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
I also think earnings have a good shot of maybe starting to rise again in the United States. And then the big catalyst that's yet to come, I think, is we might start getting better data, not only here in the United States on the economy, but better data abroad in some of these international economies.
The American consumer has a lot more cash to spend than he or she has had in a very long time. It's at a record.
And these are the jibber jabbers that you hear on CNBC. Incredible. Welcome to Phil's Gang, coast to coast around the country and off the Wall Street Radio Network. It's Friday. Market is up 115 points right now. We are in the middle of what we call a, not so much a short covering rally, but we have $160 billion in stock buybacks. Right now, companies are buying back their own shares because the earnings, we came out of earnings and we had terrible earnings, negative 8%. And if you take that same quarter a year earlier, we're up 3%. So earnings are getting worse because the economy is getting worse. So to keep pushing up the stock market, they're buying their own stock. In fact, what's interesting, there was an article in Bloomberg Business, and it starts out, and then I'll paraphrase it. The public is in a foul mood this campaign season, in part because living standards have stagnated. The median household income are lower. In fact, they're as low as they were in January 2000. So their point is that we've gone nowhere since January 2000. So the folks, they're just grumpy. And then they go on and again, they start citing why. And what a bunch of nonsense. I mean, just taxes are too high. So the Republicans are saying, well, all we got to do is bring the money, the overseas, there's $2.1 trillion. The corporate profits are sitting overseas with $2.1 trillion. And if all these profits being held overseas, if we just bring it back, if we just bring back the $2.1 trillion, that's the problem we're having. That's causing this. Really? No, that has nothing to do with it at all. Because companies aren't bringing their money over here because they don't want to get taxed on it. That is the reason why people are grumpy. That's the reason why companies aren't adding jobs. That's the reason why companies are not spending. So that's one reason. And they keep going on with all these ridiculous. Hillary Clinton, she's saying the reason why companies aren't hiring and things aren't good is because we need Listen to this. We need a new generation of committed long-term investors to provide a counterweight to the hit and run activists. She's talking about traders. She's talking about traders. She wants to raise capital gains taxes on those who trade stocks to encourage them to hold stocks longer. So she's saying the reason why you're not getting a raise, the reason why companies aren't spending money to train people to fulfill the jobs that they have, but they can't fill them because people haven't been trained for them, is because if I buy a stock and I'm going to be in a stock for 5 days, or I'm in a stock for a month, I'm the reason for that. I'm the reason for why you haven't got a wage hike, a wage increase. I'm the reason. It's amazing, is these elitists, how they blame everybody but the problem. The one thing I agree with Bernie Sanders, the only thing I agree with, is that companies are not hiring people because they're paying off, the CEOs are paying themselves off first, and then they're paying off their wealthy shareholders, their board of directors, the 1 percentile. That's why they're not investing money back into the company so that people or their jobs are getting better, their wages are going up, and people can find a new job. So it was interesting when I was reading the article and go, I've never seen such nonsense in my life. I mean, this is crazy with it. That's not what's going on. And then you hear people like this guy, Paulson, who says earnings are going to get better. He thinks, how are earnings going to get better? You're not going to have earnings get better if you don't give people on their CDs, on their money market CDs, and on their savings 3%, 4%. How are things going to get better? Listen to what he says.
I also think earnings have a good shot of maybe starting to rise again.
How are earnings going to rise? How do you get earnings? It's really simple with a company. A company sells hats. So what a company has to do is find out what the market is. So let's say the hat, they find out the market is $50 for that product, $50. Okay. So now they find out, well, what's the industry standard? What's the cost in industry to produce a hat and labor and so forth? And they say, well, it's $25. So there is a net profit of $25. Well, that $25 margin, they call it, the margin, businesses live and die by margins. And if you're selling a hat for $50, it's costing you $25 to make it. You want to make sure that $25, that margin right there, keeps going down. You want to cut that cost as much as you can, so you have a profit. Your profit grows. Well, companies don't have to do that anymore. We talked about this yesterday. They don't have to do this anymore. Why would a CEO get up in the morning, go in and figure out, if I'm selling a hat at $50, it's cost me $25. I wonder if I can get the cost down to $20. What is his incentive? What's his incentive? We go down the road to the Federal Reserve and say, give me money for nothing. I can buy my own shares. And then he buys his own shares, and he has a stock option. Let's say the shares of this company are at $25. He puts a stock option at $30. So he gets money at zero. Let's say he just made $1 million in profit that quarter. So he takes the $1 million in profit. He goes and borrows another $1 million. He buys his own shares. Now it goes up to $30. Well, he didn't have to have earnings. He didn't have to sit there in the morning and figure out, like any CEO, what's going on. Remember, a company, you measure how good a CEO is. Okay, by seeing what the return he's getting on assets, what return he's getting on equity. You measure how good he is by return on assets and return on equity and how good a manager he is. So we've taken that incentive away from CEOs. So now what happens is hats are going for $50. The cost has gone from $25 up to $30. So instead of making $25, he's only making $20. But he doesn't care because he knows he can move his stock up from $25 to $30. So if the cost starts going, he's selling a hat for $50, and his costs go from 25 to 45. He's only making $5. He can run the stock from 25 to 30, and then he can go get more money from the Fed, and then he buys stock, and now the stock goes 25 to 30, 30 to 35. So he doesn't care about the company. See, that's what earnings is. Earnings is your profit, but nobody cares about profit anymore. So what they do is they take parking space in our head, like this guy from CNBC, right?
The American consumer has a lot more cash to spend.
A lot more cash to spend? This is unbelievable. Hey, we'll be right back. It's 15 past the hour here on Phil's Gang. Subscribe to Phil's Gang.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grande, philsgang.com. Everybody was asking me, how did I know to short Ford when it was November? And it was when Aunt B was telling us everything was fine. Well, what people didn't know is Aunt B was lying to us. Because when she was raising the rates, machinery sales were down 5.6%, computers were down 8.7%, communication equipment sales down 21%. I took a look at our chart and I saw that institutions were pulling money out of Ford. So we said, let's short Ford. And we did that in November, on November 10th, because my charts told me there was a big sell signal, and we took advantage of it. And you know that stock Ford has now dropped 17%. That's the return my gang has now, 17%. Don't follow any of the jibber-jabber from CNBC or the Fed. Follow me, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. Everybody was asking me, how did I know to short Ford when it was November? And it was when Aunt B was telling us everything was fine. Well, what people didn't know is Aunt B was lying to us. Because when she was raising the rates, machinery sales were down 5.6%, computers were down 8.7%, communication equipment sales down 21%. I took a look at our chart and I saw that institutions were pulling money out of Ford. So we said, let's short Ford. And we did that in November, on November 10th, because my charts told me there was a big sell signal, and we took advantage of it. And you know that stock Ford has now dropped 17%. That's the return my gang has now, 17%. Don't follow any of the jibber-jabber from CNBC or the Fed. Follow me, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. I'm here to help you. I'm tired, and you should be tired, of listening to these financial shows like CNBC where they're all geniuses and they're always wrong. Look, stop worrying about the price to book and the price to sales and all the stuff they tell you think you need to know. You don't need to know any of that. Anybody can make money in the stock market using charts. It's about money flow. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Time is the one thing that we want more of as a single parent. Without the donors, I wouldn't have my Audrey.
El que Sayud no cobra ni un centavo para nosotros significa quitarnos todo ese estrés, esa preocupación y podernos enfocar en nuestra hija.
That was the first thing I was like, how are we going to do this? When they told us that we didn't have to pay a single bill, I was like, wow, they pretty much have saved us.
They take care of our housing. They take care of our food. In addition to the best medical treatment that my daughter could ever have. So it allows me to focus on my daughter and getting her better.
Hi, I'm Phil Grande, philsgang.com. You know, many people left the stock market after the crash, and here's why.
Responsibility begins and ends with our partners and our shareholders, and that's it.
And that's still going on. That's your planner. They don't represent you, they represent themselves, your money manager. But you have to make a change. You can't change them. You make the change. Join my gang, philsgang.com, so that we can take care of you. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. We're hitting a new year, and you should, at the same time, come in with a new attitude, a new philosophy that you're going to make money when the stock market goes down. That's right. This is the third bubble, and you don't think it's going to crash? The first bubble did. The dot-com, the second bubble, the housing and financial con. Why do you think the third bubble, which is twice as big as the two previous bubbles, is any different? It's not different. Matter of fact, it's worse. It's going to go down faster. The stock market is going to go down 50%. You're going to lose 50% of the money you have in the stock market. You're going to lose 45% of the equity you have in your home. You're going to lose 30% of the money you have in your savings. Yes, you are. Trust me. Join my gang, Phil's gang, so that we can show you how to benefit, how to profit. But you can't just sit there and own a stock. You got to learn how to short the market. Join my gang. Learn how to short. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. Welcome back to Phil's Gang Radio Show. For more information, simply go to philsgang.com. Now, here's Phil.
JP Morgan Chase shares up by about 0.5%, relatively light volume so far in the after-hours trade, but still, the company has added $1.88 billion to its existing share buyback program. So again, they've added an additional $1.88 billion to their existing $6.4 billion worth of common equity authorized for repurchase by the board from last year.
Unbelievable. There you go. Welcome back to Phil's Gang. All they're doing, every company, is buying their own shares back. It's so easy. So easy. But here's the problem. We all suffer in the end. We suffer in the end. So, but we got to think about something, though. Even though this is happening and they're taking the stock market and for 8 years, juicing this market up 200%, why weren't you in it? What were you afraid of? I'll tell you what you were afraid of. You're afraid of when it crashes. You feel like you have no control. That's why you don't get in. You know, people say, every day I look on the TV, new highs, new highs, new highs, new highs. The stock market's up, keeps going up every day. But I don't get in because I don't like the market. I remember the crashes. See, that's what everybody remembers. So every day when they turn on TV at night, the news, and they see the market's up again and the market's up again, they'd love to get in, but they don't out of fear because they remember how the stock market crashed. Because the problem is the people in the industry don't protect you, don't get you out before the crash. Well, there's no incentive for your planners, your money managers, your 401k manager to get you out. His incentive is to keep you in, because his incentive is to make sure that pile of money that's in there, he wants to keep it in. If he's managing $1 billion, he wants to get up to $2 billion because he gets paid on the amount of the money that's in the pile. He gets 20 or 50% or 30% of the money that's in the pile. When you start taking money out, he makes less money. So your fear, even though you saw the stock market going up for 8 years, 200%, people get incredibly wealthy. You stayed on the sidelines. You bought money market funds. You bought CDs. You bought savings. You bought bonds, which you get killed with 0% financing. It's the worst thing you want to be in. But then you say, I just want to keep my principal. I just want to keep my principal. You're so scared. You want to keep your principal. And I understand that. I understand why you're so scared. I have students, when they come to me, they come to Phil's Game and they subscribe. They're scared. So they come here and say, I really like to get back in the market, but I'm scared. Can you help me? And that's what I do. Give you an example. How you get your confidence back. Nothing like technology. There's 4 components to a stock. So easy. See, they make it so difficult. You know why Wall Street talks about market cap and trailing PE and forward PE and price to sales and price to book and all this crap on TV every day? Make them look so smart and go, boy, these guys, I don't know what they're talking about. It's like Starbucks language. I don't understand it. They do that so you won't understand, so you think you got to seek them out. When it's so easy. A stock has 4 components, really simple. A stock, before it goes up, that stock, when it's going to start going up, you know where it starts from? The failure. When a stock falls, when the market drops, phase 1 of a stock is after a market stops falling, when everybody shorted it, betting it was going down, the big institutions. And it stops. They stop shorting. They stop selling. That's step 1, phase 1. So easy, the stock market, to understand. So what does that mean? Well, phase 1 means everybody's done selling the stock. So your risk to get into that stock is almost nothing, because everybody stops selling. And what happens is all those people who sold short, bet that stock was going down, all the professionals, and when the stock dropped 40%, they have to buy it back, because that's how they get their profit. Now, you don't have to even understand what that means, but that's why the stocks go up. That's how they get their profit. They have to bet it went down, and when they start buying back to get their profit, the stock market starts moving up, not because of earnings, not because of companies doing better, that they have a bigger market cap or their PE ratio or their price to book or profit. It's just simply stage 1 is where they stop selling and they start buying. All that money that went into selling, let's say $1 billion went into selling. They sold off $1 billion. That starts going into buying. Wow. The second phase is where the new money comes in. And on a chart, it identifies for you. On my chart, it identifies where that new money is coming in. Now you got double the amount of money that's pushing the stock up. That's phase 2. You got all that money, the $1 billion that was pushing it down is now pushing it up. And then you get another $1 billion coming in from the sidelines. People have been waiting. Say, I'm going to wait, see what happens. So now you got double the amount of money. That's what pushes the stock up. And then you got the big institutions. You got the hedge funds going to the Federal Reserve and getting even more money at free money. So they push their stocks up. They buy their own stock back. They push it up. So then finally, phase 3 is the end of the buying. You know, you better be out. Why? Why is there? What happens at 3? On a chart, there's a certain percentage. When a stock starts going up, it starts out what we call 20%. When it hits 80%, that means it's over. Most of the buying is gone. So the easy money is made from phase 2 to phase 3. That's the easy money, which means anytime the stock pulls back between phase 2 and phase 3, it goes back up because you got all this money coming in. And the chart indicates that, and it shows you that. And all you do is follow this one line. As long as this one line keeps going up, you just watch that line. As long as that line is going up, the stock will not come down. It'll keep going up. So simple. And then you know exactly when to get out and take your profits. It's not hard. And what's phase 4? People that don't come to Phil's gang don't know what the hell they're doing. They buy at phase 4. They get killed. We'll be right back after this break.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, my name is Phil Grande, philsgang.com. I'm going to tell you something about your 401k that you don't know. You know the 401k is a tax code? That's what it is. Here's how it worked. In the 80s, you had pension funds, but they decided to give their CEOs a benefit on top of the pension. It was called 401k. That was to shelter their income. That way they could keep the CEOs because it was very competitive. But when all the jobs were shipped overseas, they no longer could keep pension funds. Too expensive. So they shifted all their employees to a 401k, duping you, thinking it was a good deal. But what they did is they charged hidden fees, which amount to about $250 billion a day, that they gave to lobbyists to go to Washington to make sure that this 401k would never be transparent. Here's what came of it.
Responsibility begins and ends with our partners and our shareholders, and that's it.
That's right. So join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. Do you ever notice they always tell you to buy, but they never tell you to sell? They never tell you to sell. Well, I'm going to help you. I'm going to help you understand. When you buy a stock, and if all you do is buy, and you never sell short to make money where they're going down, you have to be so good. That means you got to buy the companies that are always going up. Nobody's that good. Nobody could possibly be that good. You got to make money just like you make money when you buy a stock. You got to make money when a stock goes down. That's how you even the playing field. That's how professionals make money. They make money going up and make money going down, but they don't tell you that. They just want you to try to make money going up. They don't want you to make money going down because they make that money on you. Join my gang, Phil's Gang. Learn how to short stocks at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. Do you ever notice they always tell you to buy, but they never tell you to sell? They never tell you to sell. Well, I'm going to help you. I'm going to help you understand. When you buy a stock, and if all you do is buy, and you never sell short to make money where they're going down, you have to be so good. That means you got to buy the companies that are always going up. Nobody's that good. Nobody could possibly be that good. You got to make money just like you make money when you buy a stock. You got to make money when a stock goes down. That's how you even the playing field. That's how professionals make money. They make money going up and make money going down, but they don't tell you that. They just want you to try to make money going up. They don't want you to make money going down because they make that money on you. Join my gang, Phil's Gang. Learn how to short stocks at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know, everybody, the hot stocks Apple or Google, whatever it is, it doesn't matter. What people don't understand is every stock is the same. If the institutions buy it, it goes up. If they don't, it goes down. It doesn't matter the name. That's why we use charts to identify money in, money out. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, my name is Phil Grande at philsgang.com. You know we're going to have not only a stock market crash in 2016, but a housing crash in 2016. Don't you like how they tell us the housing's in recovery and the market's in recovery and the economy's in recovery? When it's not. It's in a bubble. Take housing. They loaned to a Wall Street firm called Blackstone. $7 billion. They buy 41,000 houses to go rent. Are you nuts? When they can't collect the rents anymore, those houses are going on the market and going to depress the real estate business by 30 or 40%. It's the same thing with stocks. They loan people money 600% more than they ever did before to buy stocks. That's all debt. And when the market goes down, they're going to have to dump those stocks to pay back that debt. And boy, will the market drop. Join my gang. Learn how to short. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Time is the one thing that we want more of. Without the donors, I wouldn't have my Audrey. They take care of our housing. They take care of our food. In addition to the best medical treatment that my daughter could ever have. So it allows me to focus on my daughter and getting her better.
St. Jude Children's Research Hospital. Finding cures, saving children. Learn more at stjude.org.
You're not a regular listener to Phil's Gang? What, are you nuts? Listen to Phil Grande and check out philsgang.com. Now, here's Phil.
We, as Americans, have the capacity now, as we've had in the past, to do whatever needs to be done to preserve this last and greatest bastion of freedom. In this present crisis, government is not the solution to our problem. Government is the problem.
Is the problem. God, do we miss that man. do we miss that man. Unbelievable. Welcome back to Phil's Gang. Another man that we're going to miss at some point. Walter Scheer. He's 92 years old. Great friend of mine. He's one of the best entrepreneurs in the country. Congress recognized him as an iconic man, iconic entrepreneur. Gave him the certificate of congressional recognition. He started the fax machine. That's his. You want to have the fax machine? He started the Visual Sciences that made the fax machines. The only company was ever a publicly traded fax machine company. So many accomplishments. It's incredible. So many accomplishments. This is an exciting book. This will give you a lift. It's inspirational. This man inspires you. When you read this book, you're inspired. You're inspired to get up, get out there, and do. Never mind these people on Wall Street. Never mind these people in Washington. We still can do it, just like the stock market. We know what's wrong with the stock market. Everybody knows what's wrong with the stock market. It's a rigged market, right? So what? We took advantage of it, didn't we? Since 2009, it went up 200%. And you should. But you've had that fear I keep talking about, and you wouldn't get in. Well, I'm going to get rid of that fear for you. And a stock, you don't need to know. It's amazing. You go look at a stock. I just pulled up while we were on break. I put up Anglo, ANGLO gold. Now this gold, this stock, we're up over 100%. Why? Because I didn't go and look up the profile of the company. I didn't look up the key statistics. I didn't care about where we said to buy this stock, where our chart said to buy it, where we saw money flowing in. We didn't know their profit margins were minus 2%. We didn't know their operating margins were up 10%, or return on assets were up 3%. We didn't know any of this stuff. We didn't look at any of this. Their quarterly revenues, we didn't look at that. Their gross profit, we didn't look at their total debt of the company, or operating cash flow, or free cash flow. They got $385 million free cash flow. We didn't look at any of that. I didn't care about it. I didn't know what its trailing PE was, the forward PE was, the price to sales. I had no idea. I didn't need to know it. The other thing I didn't need to know, I didn't come down here and look at the what the analysts were saying about it, because I know what they're going to say. Buy, buy, buy. Analyst opinions are a joke. I mean, they got here listed, let's see, sell. Current month, no sell recommendation. Last month, no sell recommendation. 2 months ago, no sell recommendation. 3 months, no sell recommendation. Underperform. Same thing. Current month, 0, no. Last month, no. 2 months ago, no. 3 months, no. So there's no underperform or no sell. Oh, hold. One analyst said hold last month. 2 months ago said hold. And 3 months ago said hold. But nobody says it's underperforming or selling. Here we go. Buy. 3, 3, 3. Strong buy. 1, 1, 1. Everything says the same. Buy, 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 buy. It's all buy, buy, buy. I didn't look at that. See, you think you have to look at this stuff. No. And you think you have to understand it. No. There's 4 components to a stock. And with charting, it's real simple. It identifies for you when to get it. And we got into AU. I didn't know any of that stuff by simply looking at the chart. We bought it at $7 because it gave us a buy signal on the chart. So easy. So easy. All I want to know is that I'm going to stay in that stock between phase 2 and phase 3, because that's where all the money is. I also know between phase 2 and phase 3, when the stock pulls back, it's going to go back up. Almost 90% of the time, the stock's going to go back up. But once I hit that phase 3, and right on the chart says 80%, lets you know that's where all the easy money's gone. The easy money's gone. And then on the chart, it shows you these 2 lines. They come together. When they come together, that's phase 3, and it's telling you the amount of money that's going into this stock AU is starting to come out. So now we took a look at it and go back, and we can see the stock finally stopped going up. stopped going up on March 4th. It's been going sideways and keep hitting $14 fail. $14 and fail. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. Now I look, no wonder it's failing. Money's coming out. It's in phase 3. That's easy. My red line and my wild line are coming together. You could have a 4-year-old do this. It's not hard. So you're fearful because you don't understand. And it's so hard for somebody like me to reach you because you think when you listen to these guys like this guy, Jim Paulson.
I also think earnings have a good shot of maybe starting to rise again in the United States. And then the big catalyst.
Now you think he knows something because he said that. Of course he's going to say that. Earnings aren't going to rise. You're not going to get earnings to rise until we focus on earnings. Who's going to focus on earnings when you can go to the Federal Reserve and get free money? Would you? If you go to the Federal Reserve and you own a company and get all the money at zero and you can buy your stock and push that stock up from $10 to $200 without doing any sales, very few sales, or increasing your margin, who cares? Earnings, you have to earn them. You have to earn them, but we don't earn any more of the earnings. And this is the problem. That's why it was interesting today when I saw Bloomberg. They came up, well, people are grumpy because they don't have any jobs. And they see the stock market going up. Well, they don't get it. They don't get it. I could sit here all day and explain to them. Companies aren't investing. How many days do I tell you? It drives myself nuts, drive you nuts. Very simple. If a company doesn't invest in equipment, then if it doesn't invest in equipment, jobs aren't created. If it doesn't invest in equipment, plow its profits back in, then guess what happens? Nobody gets a raise. And there's no new jobs at that plant. Until every plant stops with a zero money, go back to trying to make better margins, better products. Oh, see, we don't care about products anymore because we send them overseas. You know who really screwed us was George Bush, Mr. 43. Do you know from 2000 and 2001, when he got in 2001, he is directly responsible for the biggest loss in manufacturing jobs from 2001 to 2009. You know why? Because he supported China joining the World Trade Organization. They should never have been allowed to join the World Trade Organization. He supported it, even though he knew there would be little benefit for our workers, for our country. He knew. Bush knew by supporting China to join the WTO, it would have a terrible effect on our U.S. workers. Over 2.1 million jobs were lost. That's 76% of our manufacturing jobs. These jobs were lost. Unbelievable. Accounted for more than half of our U.S. manufacturing jobs. Lost between 2001 and 2011. Then we lost another 3 million by 2015. He knew this was going to happen, but he pushed for China to become part of the World Trade Organization. Are you kidding? Then our trade deficit grew because of China joining the World Trade Organization. And that is the major cause of our trade deficit. And that's what causes you to lose your job. Join my gang, Phil's gang, right now.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
We're on our best 2-year job creation streak in 20 years.
What are you, nuts? Who'd believe that? Let me tell you the truth. First of all, the 292,000 jobs we got in December 2015, and they told us the unemployment rate is 5%. Not true. You can't trust these people on Wall Street. You can't trust the press. What they don't count is, in December, for example, the 615,000 discouraged workers. A discouraged worker is a person unemployed, gave up looking for work, but this administration does not count them as unemployed when calculating the 5% unemployment rate. Instead, they classify the discouraged as marginally attached to the labor force, but they're not considered part of the labor force or part of the unemployment. That's why you can't trust what they tell you. If we back into 625,000, the real unemployment rate is 12%, not 5%. That's why you got to join my gang, where you get the truth and where we use charts. Join the gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Be sure to watch the Phil's Gang Show with Phil Grande, weekdays at 3 p.m. Eastern Standard Time on various devices like smartphones, tablets, your computer, and more. Get free access to the Phil's Gang Show right in your hands at home or on the go. Simply go to philsgang.com. That's philsgang.com and click on the Listen Live link. And we'll see you on the charts.
Hi, my name is Phil Grande at philsgang.com. The 401k big lie. They tell you invest $10,000 a year for 30 years, compounded at 6% annually. You will have a grand total of $245,000 to retire. That is not true. That is not the truth. What they don't tell you is the hidden fees. There's 27 hidden fees in your 401k. When you're all done, you lose half of what you put aside for your retirement. That's right, half. And another thing, you're not allowed to do individual stocks in a mutual fund. And you're not allowed to make money when stocks go down. That's ridiculous. Would you buy a car with just forward and no reverse? Why would you ever be in a fund that you can't make money when the stock market goes down? Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
AMVA, and I've lost over 30K on it, but it had excellent earnings the last several quarters, and if they make the cameras and drone equipment, I don't know why it's so weak these days.
It's so weak these days because you don't pay attention to what they make. You don't care about their earnings. The problem is the institutions are pulling their money out, and that's all you need to know, and that's what we identify in the chart, and that's why I become a Phil's Gang member.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. Listen to what Fisher said, the former Fed governor.
We front-loaded at the Federal Reserve an enormous rally in order to accomplish a wealth effect.
That's right. Did you hear that? They took the stock market, front-loaded it, ran it 200%, so we ended up not only with a fake stock market, but fake GDP, fake money, fake jobs, fake prices, fake everything. But we took advantage of that, and we're going to take advantage again. That's why I told my gang in May to short the market on 5/29. That's May 29th. I'm telling you to short the stock market. And we were right. And the market went down over 11%. That's why you got to join my gang and learn how to short stocks just as much as buying them. Learn how to short with me, Phil Grande at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. Put your money to work. Make your investments pay. Listen to Phil Grande and philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang, 877-600-GANG. You can call now. Stephen will pick up your call. Denise will pick up your call, 877-600-GANG. Join the gang. Subscribe. I will show you. After 4 weeks, you're going to go, why haven't I done this? Again, you're scared. I understand that. You're scared. Even though the stock market went up 200% since 2000, and people don't understand why. There was no risk to it. Because it was all of this zero money, this free money, or near zero. And companies keep buying their own shares. They're probably going to do it again, but it's going to fail and we're going to have a crash. But that's okay because we'll make money on the way down. But the key to a stock is to make sure that you know when it's going to collapse, the stock. Then the fear is gone. I can reach out and help you do that. Look, our bank stocks are up today. Our Intel is up today. Look at all our stocks are up. Intel's up. IBM is up. Our IBM is up big. We bought IBM around $132. It's now $147, $147, about $132 to $147. That's 11% gain. look, you didn't have to know anything about the company. All you had to know was phase one started. All those people would have sold IBM when it went down about 60%. When it dropped, they started to buy it back. They have to. They have no choice. They have to buy it back to pick their profits up. So that kicks the stock up. I mean, think how, just think how easy that is. When IBM dropped from 172 down to 116, give me that, Jer, dropped from 172 down to 116, a 32% drop. All we had to do is wait. We knew it stopped going down. All that money, let's say that was $10 million. Let's say that was $10 million, right? When it dropped from 172 to 116, we know that's phase one now of IBM. It's one of the 6 stocks we follow every day during the year. So we know what phase one is. All that money, let's use for simple. Let's say it was $10 million it lost. They went down. Now they got to buy it back. So that means $10 million is going back in this stock. Phase one. 10 million. Now it turns green. That's called our breakout. Phase two. Now you got another 10 million coming in. So we know the phase of a stock starts at 20% and it stops at 80. So in other words, you go from 20% up to 80. 20 is the starting line, up to 80 is the finish line. So between 20 and 80 is phase two and phase three. How much easier can that be? I'm sorry, between 30 and 80. Okay, 30% and 80%. That's your phase two and phase three. And the chart shows you when you start out phase two, and it shows you when you finish at phase three. So easy. So now, the stock, Goldman Sachs for us, give me JR from 132 to 148. We're up that alone. IBM, 132 to 148. That's 12% gain. 12% return. But the nice thing is when it goes back down, you're going to know that too. It's so easy. Got to get rid of that fear. Look, I told you, this is ridiculous. Bush was directly responsible for the biggest loss in manufacturing jobs from 2001 to 2009 because he supported China joining the World Trading Organization. We lost manufacturing jobs. Big American manufacturing gone. He knew it. Our trade deficit was growing. When your trade deficit grows, you lose jobs. A major cause of the growing trade deficit with China is currency manipulation. It's what Trump talks about all the time. The trade deficit has a terrible effect on manufacturing. He knew, but he still pushed for China to join. He talked to everybody, let China be part of the World Trade Organization. Even though he knew the trade deficit would be terrible, it would have a terrible effect on our jobs, and we'd lose millions of jobs. Especially in the computer and electronic products industry. Especially for workers with no college degrees, which 70% of our workforce, or 100 million workers, have no college degree. They're the ones that really get killed. Terrible effect on their wages. Which in turn, the low wages have a terrible effect on our economy. But this is good for the wealthy. Because now they can go, and remember what the Federal Reserve is a fire engine. They're the ambulance that comes in. Here, we'll give you zero money. We'll tell everybody this is good because we're going to drop rates, and that means people are going to go out and buy stuff, and we're going to create jobs. All a big lie. What are you, nuts? America has lost a significant number of factory jobs over the last 3 decades. In 1980, 1 in 5 Americans worked in manufacturing. Now it's 1 in 12. Ohio, Kasich is governor. He supported China joining the World Trade Organization. Can you imagine? We have a third fewer manufacturing jobs. And now Ohio has a third fewer manufacturing jobs than it had in 2001. Michigan, their manufacturing jobs are down 32%. But Bush pushed to endorse China joining the World Trade Organization. Even though he knew, like Governor Kasich of Ohio, it would be devastating for Ohio, and Bush knew it would be devastating for our country and devastating for our non-college educated blue-collar worker who needed a manufacturing job. So both Bush and Kasich, even knowing the trade deals, NAFTA, now including the TPP, would lower their wages, even take away their factory jobs of our blue-collar, non-college educated, middle-class American. Knew it. But see, both Bush and Kasich had to pledge to support the special interest, the donor party. See, that's the problem. They have to pledge, say, okay, you get me in office, I pledge to follow you. I pledge to put your policies in. And the policies are terrible. It only benefits them. Look, there's simply not enough good jobs to go around anymore. This is crazy. Now we have 51% of all Americans working, all American workers rather, make less than $30,000 a year because of these trade agreements. But both Bush and Governor Kasich knew it. Why do you think Kasich almost lost? Because the people in Ohio know it too. Look, the problem with the rigged market capital system that we have right now with this zero money compared to a free market capital system, lying, has become so second nature to Washington and to Wall Street. Fraud is the number one component of this economy and this administration, as it was Bush administration. They have to lie to us, just like when you hear this.
The American consumer has a lot more cash to spend.
You know, you don't believe that. But see, that's the problem with this rigged market capital system. It's the lying. It's the lying.
I also think earnings have a good shot of maybe starting to rise.
That's not true. You can't have earnings with all this 0% money. Who's going to focus on it? To create jobs, we need to stop propping up our financial system and to purge it. So to end the extend and pretend policy of this administration, the next administration, the Federal Reserve, we need to get back to the old-fashioned good jobs, because the American dream starts with a good job, which is an individual's primary identity, their very self-worth, their dignity. It establishes the relationship they have with their friends, their community, and country. And when Obama has failed to deliver the plentiful time, the full-time jobs, he's failed America. So hasn't Bush. Every president is going to fail America as long as they're owned by special interests. So what are you going to do? Sit back and cry? Are you going to stay out of the market? No, you're going to join Phil's gang, because this is where you get hope. Because I'm going to show you a simple stock. It's so easy. As long as you know what you're doing. It's as easy as driving your car when you're not drunk. It's so easy. I mean, you can't sit here and look, and I can't teach you the three phases of the stock. It's so easy. An eighth grader can figure it out. You got to do something for yourself. These politicians aren't going to help you. Join my gang, 877-600-GANG, $49.95. And don't forget Walter's Way. Pick that book up.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to